Excellent. So, hello everyone. It's Charlene Williams. I'm a real estate broker and I work with Real Estate Homeward. I've been a broker for about 15 years. And today I have with me Dion Begg, who is a mortgage broker extraordinaire. And he's going to introduce himself. Hey, Dion.
Hey everybody, so yeah, my name's Dion. I'm the founder of a mortgage team called Kanga Mortgage. Kanga because I'm actually originally from Australia, moved to Canada about 16 years ago, and in that time been very fortunate to have helped thousands of Canadians buy their first home and build wealth through real estate. So excited to talk to you and your audience today, Charlie.
That's great. Thank you so much for that, introducing yourself. Dion and I, backstory, met in March at an AREA conference. That's
Yep,
correct, right?
that's correct, in Ottawa. Yeah.
Yeah, that was a very fateful day, and I've been meaning to get in touch with you for quite some time. So I just basically went and DM'd him on his Instagram and said, "Can you do a video with me?" So I'm glad you were able to accommodate.
No, always excited to talk real estate and mortgages, and especially in an ever-changing environment, which is boring to some, but interesting for you and me, right?
Yes, exactly. So let's talk about the Bank of Canada rate. They dropped it last week, 0.25%. So now, from what I understand, mortgage rates are like 4.50. Is that correct?
Yeah, so the Bank of Canada policy rate, which is the rate that you'll see in the news, started this year at 5% and is now at 4.5, so it's dropped a half a percent. For those of you who have a variable rate mortgage which adjusts with prime, then all of you will be seeing that reflected in your mortgage payments in the next in your next cycle. For those of you who are in fixed rates, generally, well, if you already have a fixed rate, then that rate won't change. But we're getting a lot of questions, Charlene, about people who sort of have pre-approvals right now out there trying to buy and like, oh, okay, so Dion, is our rate going to drop immediately on the fixed? And the answer is no. The Bank of Canada rate does not directly impact fixed rates. It directly impacts variable. That said, generally speaking, it does somewhat trickle down, but maybe weeks or months later. So we could see fixed rates dropping in the weeks ahead as well.
Okay, that's great. So how does it really affect affordability?
Right. So the thing is, we had a meteoric climb in interest rates over the last couple of years. And while a half a percent drop from the peak is nice, it's probably not enough to have a huge impact on the current market. I'll give you some context. So for every 1% rate change, it generally translates to a 10% change in your affordability. Okay, so
Mhm.
if at the start of this year, I just did this exercise with a client, they were basically approved for $800,000. But now with this half a percent drop, they're now able to purchase for $840,000.
Okay.
Okay, so it's had a marginal impact there. And I will say that the economists who work for major banks are all predicting that by the end of the year, we're going to get another half a percent. So that couple who at the start of the year qualified for 800 and now qualifies for 840 may qualify for 880 by the end of the year if rate drops continue as expected.
Okay, that's a significant amount.
Yeah, it is. And the thing is and you would know this on the real estate side, the challenge is finding sellers who are happy to sell at what people can afford in today's market.
Right.
Even though that affordability is creeping up incrementally, people do have a lot of choice. There seems to be a lot of inventory on the market. I'm sure you're seeing this yourself.
Yes. Hmm.
But I still think there needs to be a little bit of give on the seller's side, even though the affordability on the buyer side will increase. I don't know if, if the sellers are going to get the numbers that many are holding out for. You know, they're still sort of holding out for March 2022 sale prices, which
Right,
I don't
right,
think we're going to see in the near future.
right. I think that's at least 3 years off in terms of being cyclical. So why have they dropped? Why have the interest rates dropped? And what can we expect in the near future, let's say?
Sure. So the thing that drives the Bank of Canada rate is what is going on in particular with inflation. And just to remind everybody, the journey we went on, COVID happened. The Bank of Canada and the government were scared that people weren't going to be spending money, weren't going to be able to make their payments. They flooded the market with new money that they printed, as well as dropping interest rates. During that time, there was a bit of a buying frenzy, and inflation, which is the target rate is around 2%, went all the way to 8.1%. And so this had to be corrected. And the way this was corrected was the Bank of Canada made money more expensive to borrow. So, so they've basically been on this rampage, rate rampage, I call it, to get the inflation rate down by increasing the cost of borrowing. So that rampage had its basically reached its goal, right? So we've seen inflation drop and drop and drop, and I'm happy to say now we're at around 2.7%, so very close to the 2% target. And going forward, we're likely going to continue in that direction. So we've got lower inflation. We also have increasing unemployment, which is sort of explained through reduced retail spending. So effectively, Canadian consumers are saying, we've got no money left in our household after we pay all of our debts. So we're not buying stuff, which means people aren't going to be employed, or let's say at the retail level, but that trickles down as well. And also, as you know, the construction starts are down, and many Canadians are directly or indirectly connected to the construction industry. So we're effectively seeing a massive slowdown in the economy. You'll see that people are saying that GDP is up. You know, the number is 1.5%. But once you factor in this crazy population growth that we've had in the last couple of years, GDP per capita is down. So, we are actually going backwards as an economy, and that is why rates are coming down.
Okay.
Yeah.
Wow. That's a very technical explanation, but I'm sure I understand it. So I'm hoping everyone else does as well.
Well,
And if
yeah,
you have any
economics is
questions,
all interconnected, right?
right.
If the government wants to target something with interest rates, it doesn't just impact real estate, it impacts the entire economy, right?
Hmm.
And so this is where we're having this massive impact. And we're seeing even mortgage defaults, even though they're still minor, they're increasing right at the moment.
Right.
Mm.
Right. Okay. I guess my next question would be, um, for a buyer new in the market, they're going to come to you for a mortgage or a mortgage pre-qual. What kind of income do they need in order to purchase in this market?
Okay. Well, actually, I'll come back to you with a question, which would be, what kind of price point are first-time home buyers needing to aim for, Charlene, in the market that you're seeing right now? What have you recently helped first-timers purchase?
So recently I've had, and recently as in last week,
Yep,
we did a purchase of, gosh, I'm trying to remember, $780,000 for a detached home in Whitby.
got it.
And
Okay.
that is unheard of. That is like
Yeah,
the
that is
lowest
crazy.
I've seen it.
Wow. Okay.
Yeah.
Okay. And
Detached
coincidentally, I
home.
just saw a detached purchase sorry, not detached. It was a row house, but freehold
Hmm.
um, in Parkdale that went for 1.1 million, which again is unheard of, right? That's
Yes.
usually a 1.4, 1.5 neighborhood. So those opportunities are there. But let's go with your example, which I think is more realistic for most first-time home buyers. So let's say the
Hmm.
number ballpark is 800K. Okay.
Hmm.
So if you're out there trying to buy something for $800,000, generally speaking, you're going to need an income of around 160, 170,000 in order to make that purchase, assuming standard minimal down payment. Um, and I know many of you listening might say, well, we don't make that as a combined household.
Right.
Maybe you're making 120, 130. And so what I will tell you is that in the last two to 3 years in particular, almost all of our first-time home buyers have made that purchase together with the help of family. be it family co-signing, mom and dad adding their income to the application,
Mhm.
or mom and dad gifting a larger down payment of say 200,000, and therefore that 120,000 $130,000 income could make that deal work.
Ah, I see. So it's not the minimum 5% down sort of thing. You'd have to have a little bit more, well, a
Well, yeah,
lot
so
more.
you could do it with minimal down, but you would need that 170K income in order to
Okay.
make that work. So it's oftentimes our conversations with our clients often are, okay, here's what you can do by yourself. Okay, once we determine that number, they might say, okay, well, you know what, I do need more than that, and that will open that conversation to say, okay, well, let's talk with your parents, grandparents, figure out a way in which they can help. And the funny thing is, Charlene, that most people don't these older people don't think they can help. But when we
Right.
have a conversation, when we say, okay, here's the ways in which you can help your children, and given the opportunity, most parents, grandparents will help their children, but they just need the information to let them know, okay, here's how we can access your equity to give your children down payment, or here's how by lending your income to the application, your children will be able to buy that property.
Right, right. So it's better to get family or, yeah, family, in-laws, whatever, involved in the process if you are looking to purchase. Now, would you recommend purchasing now or waiting until, because I noticed a lot of buyers are waiting because they're signaling more rate drops in the future. There's a lot of buyers still on the sidelines. What I think will happen is the prices will start to rise again, and you
Yeah,
don't
so
want to be.
when will that happen? I can't say for certain.
No.
What I can say is that, as we just discussed, there's some opportunities out there for those people who are ready to pounce on those opportunities, like a
Hmm.
$780,000 detached home in Whitby. Yeah, it is unheard of. I haven't heard of those numbers. That's like a townhouse number 2 years ago, right?
Yes.
So to be able to take advantage of those opportunities, we have a lot of our clients who are pre-approved. And yeah, they said to me, Dion, we might buy in the next month, or we might buy in the next year. But we want to be prepared so that when we're looking, if an opportunity presents, that we can jump on that, right? So I
Right.
would say for anybody who has an inkling that within the next month or 12 months they would like to buy, the first step is to determine what you qualify for now, so that if you go out this weekend and a crazy deal presents itself, that you can actually take advantage of it.
Right. And that makes a lot of sense. So, switching gears for a little bit, let's talk about debt and how that affects your your payments or your mortgage pre-qualification.
Right, right. So Charlene, what do you think the number one debt that a person has before they buy a house? What do you think that payment, that debt might be, that most people might have?
If they're anything like me, it would have been a car
Car
payment.
payment,
Yeah.
exactly, exactly. And so I will tell you that I fully understand everybody needs a car, but I will tell
Mhm.
you from the mortgage perspective, that car payment is the thing that we see hurt people's ability to borrow, almost in every instance, right? So,
Mhm.
15 years ago when I started working in Canada as a mortgage person, as a mortgage guy, we probably saw payments of around $300 to $400 a month. Today, those payments are $600 to $700 a month on average. Okay. Now, what's interesting is that $600 that you're paying on your car, that's about the same as a $100,000 payment on your mortgage. Okay. So if you've got a $100,000 mortgage, that $600 pays that.
Mhm.
So what people don't really understand in general terms is, because you have that $600 car payment, you've just reduced your mortgage borrowing capacity down by $100,000. Okay. So
Okay.
if you came to me thinking you'd get a 600K mortgage, but no, you got the car, it's now 500,000, right? And so in many cases, people say, well, what do we do, Dion? We need a car, right?
Mhm.
So interestingly, again, the way in which parents and grandparents might be able to help, instead of giving your children an extra $100,000 for down payment, you could just give them 10 grand to pay off their car, and it
Right.
would have the same impact. of increasing their borrowing capacity by that extra 100,000. So again, there's different ways in which we can move these issues around in order to boost borrowing capacity. And when people sit down and talk with us, they say, well, the person at the bank never told us this option, right? And that's simply because I guess all we do all day every day is figure out how to use the resources that a person has to then maximize their borrowing capacity. So yeah, that car payment, that's something that we're all going to have to deal with.
Wow. I've never had it, my mind is blown. I've never had it put that way before that, okay, if you get money to pay off your car, then you're increasing your ability to purchase.
Yeah,
That's,
exactly.
yeah, that blows my mind. Um,
Job done then.
okay. Yes, absolutely. I'm glad we had this talk. Thank you so much, Dion.
You're welcome.
And I will definitely be calling you again for you to impart some more, wisdom to all
Yeah,
of
happy
us
to.
out there.
Well, let's
Thank
hope that
you.
there's a good reason to, in that there might be more rate drops in the near future, and we can talk about how those impact people in the months ahead.
That's great. Fingers crossed, rate drops. Thank you so much.
You're welcome. Bye for now.
Let me stop recordings.